historically, our sector has done a fairly poor job at managing perceptions, and I think over the last couple of decades, um, the sector had kind of taken a view that we were providing a necessary product for the market and didn't really have to justify all of the things that we were doing. So I think that has led to a perception problem, and have certainly had a number of entities around the world that have been working against us in terms of the perception of the oil sands in particular. If you do look at the Canadian environmental standards, where certainly our oil and gas sector has the strictest environmental standards globally. Uh, we have companies that, and again on the ESG side of the equation, companies that have done more on the E, S, and the G than most companies around the world that benchmark extremely favorably. But there is a perception of the sort of dirty Canadian oil that we're going to have to continue to work on. I think over the last couple of years, we have done a better job of promoting the sector, of promoting all of the things that the largest companies in the sector are doing to be good stewards of the environment, of supporting the communities that they operate in, and providing jobs, providing affordable and reliable energy. But I think there's still a lot of work that's going to be required to get investors to come back to the sector. I'd say in terms of the energy transition progress of the sector, Europe is far ahead of both Canada and the US. And the US is probably moving much quicker than we are in Canada, but there is a lot being done within the Canadian oil and gas sector on energy transition, on decarbonizing the existing businesses. Oil sands pathways is a great example of a very significant undertaking to meaningfully reduce emissions from the oil sands. And I think we will start to get credit for a lot of the work that's been underway. Maybe just lastly, we are seeing a significant resurgence of interest, over the last number of months. $100 oil is certainly helping with that. ESG certainly hasn't gone away. Those questions still remain, but we are seeing investors come back in pretty meaningful size and moving down market cap quite significantly. It is challenging, and it's a pretty, it's an easy thing to say that the world should just pivot away from fossil fuels towards renewables. When you actually think about what that process looks like, it is a extremely daunting task, an extremely expensive proposition. There aren't really any easy answers. The renewables, in many cases, by their nature, are more expensive and less reliable. And we think that there is a pretty significant role for renewables to play in the global energy mix for decades, and the renewable um, portion of the pie will continue to grow pretty rapidly. But there's no cheap, easy answer in terms of switching away from fossil fuels towards other sources of energy. It is going to be an extremely costly transition, and not all of it is commercially viable today. And so I think that the one element is going to be technological advancements over the coming decades that will hopefully lower the cost of the transition. But a lot of the near term decarbonization is very expensive, and there's no line of sight to costs materially reducing in the near to medium term. Looking backwards, we've certainly seen political and regulatory environments change over the last couple of decades and have a pretty material impact on oil and gas investment. That's been both provincial as well as federal. I think we are in a place, and we're in a place in Canada where there have been headwinds in terms of oil and gas investment, but there've been headwinds globally towards oil and gas investment, and we've seen pressure on U.S. investor or U.S. producers as well as Canadian producers um, uh, that that are beyond regulatory or political pressures to limit the amount of growth in their businesses. As a result, we're seeing $100 oil prices, and think going forward, not sure that a change in the political or regulatory environment would materially change the investability of the Canadian oil and gas space. We do think that and have seen investors coming back to the space based off of the the business propositions of the Canadian producers, but don't expect that there would be a material change or material increase in the investability of the space based off of near-term political or regulatory changes. Maybe a couple comments. One, the pendulum swung very far, from my seat in the wrong direction, and there was a lot of talk and a lot of exclusionary investing, a lot of funds, particularly university endowment funds, excluding fossil fuels from their potential investments. I think we have seen a number of funds that came out along those lines pivot back a little bit, and I think what we would push for, and we have very regular dialogue with a range of investors, and our position is to be supportive, and focusing on the top ESG performers within a sector. I think the position we would take is if you decide not to invest in a Canadian producer, you don't get a seat at the table. Versus if you are an investor in a Canadian producer, you have a say in the direction that that company is going to take. And I think we're seeing more of that, where instead of the exclusionary approach, the we've seen more investors continuing to invest as again, affordable and reliable energy is part of the standard of living that everybody enjoys, and I think people are starting to realize that the energy crisis that Europe saw over the last number of months certainly highlights the need for reliable and affordable energy. And just seeing more investors that are spending more time invested and focused on trying to influence the direction of travel versus just walking away and taking their money with them. In terms of sustainable finance or ESG, we do view it as an opportunity, and I think it's maybe the lens that we've taken has changed over time. Probably more of an opportunity than a headwind, and opportunities for energy companies to highlight and work within sustainable finance frameworks, highlighting the progress that they're making towards ESG goals. In terms of the energy transition and really flow of funds, it certainly has played a significant role in the energy crisis that we're seeing in Europe. The move to quickly retire power driven by fossil fuels and move that into renewables had resulted in a an energy supply network that is just fundamentally less reliable. While we think that renewables are going to play a very significant role in the energy mix as we look forward, there needs to be a measured transition. And that by their nature, if you look at a solar project or a wind project, that those projects are kind of at the whim of the sun and the wind, versus a natural gas fired power plant that can react instantly to a power demand, a need for power. And so creating the a more measured transition, where we see continued availability of reliable power as we build out the renewable network, I think is going to probably hopefully be the course that North America charts versus the more rapid transition that Europe was trying to make. It is a good question. We think, especially for the larger entities, getting to net zero is going to be essential. Some of them have come out with net zero pledges already. Others have said that they just don't see line of sight in their business today on how they're going to get there. Not that they're not continuing to work to net zero, they just don't see the line of sight to get them there today. We think that all Canadian producers are going to look to continue to make progress in terms of emissions reductions. For some businesses, it's easier to see your way to net zero. We have producers that sit within Western Canada that are net zero today. And so different businesses have different challenges in terms of getting to net zero, but think that all producers are spending a significant amount of time and resources thinking about and putting in place the projects to make progress towards net zero. Maybe I'll start with our organization. We have one of the leading sustainable finance groups. This is a group that interfaces with both issuers and investors around a range of ESG topics. That was a group that didn't exist 5+ years ago. We spend a lot of time and have a very sizable public commitment to sustainable finance. And when we look internally in terms of the resources that are dedicated to sustainable finance, to ESG factors, it's been a pretty significant shift, and we're seeing that in terms of our issuer clients, the the resources and reporting that they're doing today versus a couple of years ago. And then on the investor side, almost all large pools of capital have a pretty significant ESG component. Oftentimes, as referenced, it's more of an ESG overlay, but large pools of capital all have a pretty meaningful element of ESG in their approach to investing. We think that trend is going to continue for investors and for issuers. ESG scores, ESG reporting has obviously become much more topical, much more front of mind today than it ever was. Hard to get through an investor meeting on either the equity or debt side without ESG being a meaningful topic of conversation versus 5 years ago, ESG was very rarely brought up in an investor meeting. There is a pretty broad range of opportunities to decarbonize sectors generally, the oil and gas sector specifically. For the oil and gas sector, carbon capture is the probably the most impactful and most near term opportunity. And the opportunity that sits within the oil sands is a little bit unique. When you think about oil sands operations, they're very concentrated, and they have a very concentrated stream, particularly around in situ projects where you're burning natural gas to create steam to inject into your in situ project. It's a very concentrated source of carbon that is probably the most economic to capture at that concentrated source. If you think about other operate oil and gas operations globally, you think about large acreage positions that are spread over thousands and thousands of wells. It's harder to see the applicability for carbon capture in some of those operations, but for the oil sands, it is probably the most impactful and the most commercially viable where we sit today. So would probably have that at the top of the list. There's been a lot of work underway for a decade or more in terms of fugitive emissions in more conventional oil and gas operations, where producers are looking to limit the amount of natural gas that is emitted. There's been a lot of work around flaring and reducing or conserving natural gas instead of flaring natural gas. But I think the for Canada particularly, and probably for the oil and gas sector globally, carbon capture is sort of top of mind in terms of the near term steps of decarbonization. It's a good question, and so I guess on the one hand, oil and gas companies by their nature are very sizable. They're very impactful in terms of market cap and impact on index. They certainly haven't been a no-fly zone for all global investors, but a number of global investors certainly shying away from the oil sands. I think the oil sands companies over the last couple of years have done a really good job of more proactively approaching ESG reporting, highlighting the impact and the progress that they've made. Um, I I think that will continue and hopefully will start to or increasingly resonate with global investors. The profitability of the oil sands companies is pretty hard to ignore. The amount of free cash flow that a Cenovus, a CNQ, a Suncor is generating, and the return of capital proposition from those companies and others is pretty hard to ignore. And then when you pair that with the outstanding job that they've actually been doing on the ESG front, we do think that perceptions will hopefully start to change over time, and they'll be successful in trying to convert global investors back into their names. When you look at ESG rankings, those companies, particularly a Suncor, other companies within the basin, including an Arc Resources or a Prairie Sky, rank very highly in terms of their ESG scoring, not just within the oil and gas sector, but globally across all industries, all companies. And I think the global investors that actually dig into those ESG scores recognize where the Canadian energy names sit and how they rank relative to their global peers. I would say the thing that most Canadians, young and old, don't appreciate about ESG as it relates to the Canadian oil and gas sector is how much progress the sector has made and the effort that these producers are putting in to both or all of the E, S, and G. I think the impact that the producers are having on the environment in the communities that they operate in, on the people in the communities that they operate in, and in the cities that they are headquartered in, is extremely meaningful and probably underappreciated by um, you know Canadians of all ages, and by many investors around the globe. But the progress that Canadian energy producers have made on the ESG front has been pretty remarkable, and the outlook and the ambitious targets that they've set has really been world leading in terms of the benchmarking relative to their global peers.